The stock market climbs a wall of worry, but listen, after it's climbed that wall of worry, then what happens? Does a big drop follow? I've got a historical perspective coming up. My name is Mike Bernard. I'm the host of the Wise Money Show. I'm also one of the certified financial planners right here at Korhorn Financial Group. Make sure you hit that subscribe button, turn on notifications, and smash that thumbs up button. All right, there's no doubt the stock market has fulfilled the age-old saying that the market climbs a wall of worry. There has been a wall of worry. This is, it seems like every rally off of a recession is the most hated rally ever, but this one has had a lot of skepticism and frustration as people see meme stocks going crazy and these crazy valuations. You say, where could this come from? But listen, as I record this, I don't know when you're digesting it, as I record it, the stock market's up nearly 25% year to date. That is astronomical, especially with all of the threats and concerns that we've seen this year with the economy and COVID and supply chain issues and all sorts of stuff. But it's a fantastic return. It's climbed a wall of worry, but what happens after it makes that climb, right? Let's dive into a historical perspective. Throughout market history, the stock market, the S&P 500 has been up 25% or more 14 times. What happens the year after that? 12 of those 14 times the S&P 500 has been positive, and not just positive, on average up 11.6%. That's incredible. So for those of you that say, oh my goodness, well, the stock market's done so well recently, it's bound to drop. The history suggests it's not going to happen next year. These all-time highs will continue to make more all-time highs. Now, this one could be different because valuations are extreme and the recession was so short and we've had such an aggressive monetary policy. As that gets unwound, what will happen? I know I've got all those concerns too, but at least from a historical perspective, 14 times this has happened. And 12 of those 14 times, the market continues to surge higher, up an average of 9% or 11% in the next year. That's incredible. And if you're saying, now wait a second, Mike, it's November. We're not up 25% for the year. For this year. That's just year to date. A lot can happen between now and the end of the year. Absolutely, no doubt it can. Check this out, going back over 30 years, the past 30 years, the stock market was up 25% or more in the month of November 4 times. In all 4 of those times, December was positive as well. December was positive as well. And, we've got this Santa rally and all that sort of stuff. This is, I'm not promising, okay? And I've got my doubts as well. But just from a historical perspective, the fact that we're up close to 25% in November right now, historically, stocks continue to do well in December as well. Let me throw a little more analysis at you. Okay, we had a little rockiness in November a little bit when inflation came in higher than expected. Actually, look at the trend within the average November. Yeah, there's typically a little lull during the middle before we see a surge closer to Thanksgiving. And in more perspective, if you look at seasonally, on average, how does the market perform? What actually is happening during different months of the market? We're actually ahead of pace, right? And if you look at historical trends in November and December, it's positive there as well. So guys, the simple fact that we've had such an amazing year in the markets, climbing that wall of worry, like I mentioned, up nearly 25%, November should continue that trend. December should continue that trend. And historically speaking, 2022 should be a good year in the markets as well. What do you do with this information? Well, number one, a lot of times when we're talking on the Wise Money Show about economic issues, yeah, there's a lot to be concerned with right now, okay? But still, wholeheartedly believe in long-term investing and that and the benefits of investing. And so to us, the action is very simple, and that is to hold on to and continue to practice your tried and true investment philosophy. Just because the market has had such a great surge, just because valuations seem high or extreme, just because the market and inflation, or excuse me, the economy and inflation could be overheating and the Fed's aggressive policy might need to start being stepped back, just because of all that from a historical perspective, continue to believe in the long-term benefits of investing, okay? Don't deter from that. So for us, that is, do comprehensive financial planning. Make sure all 6 areas of your financial life are working in sync. One of those areas, your investment planning. Make sure that you're practicing an investment philosophy that fits within your entire financial life, all 6 areas, okay? Make sure it's appropriate for your financial goals. And then that investment philosophy to us should be a multi-strategy approach. Make sure you're taking the right risk level for your overall temperament, right? And for your long-term goals, but then have a multi-strategy approach where you've got a great diversification of low-cost index-type funds. Okay, great diversification. You're covering your bases there, and you're not taking more risk than you should for your situation. And then complement that with a momentum strategy that, yeah, listen, well, what if this is one of those couple of times when after a great year, there's a bad year in the market? Or what if this aggressive monetary policy, as it gets pulled back, it creates some really significant tremors in the market? Yeah, that's why you have a momentum strategy as well. That when certain areas are really working, you've got a strategy that exploits that or can exploit that. And when their risk suddenly emerges in the market and there's no momentum anywhere, that momentum strategy should adapt to be able to protect on the downside as well. That's the strategy. And if that's the case, if you've got comprehensive financial planning, a tried and true investment philosophy that contains multiple strategies, then listen, after a huge year in the market and lots of risks of overheating and melt up and all of that, there's no reason to panic and no reason to make some big changes. Make sure that those investment strategies fit with your long-term goals, do some rebalancing, make sure you're properly diversified, and you're good to go. You are good to go. Work with your CFP on that. If you don't have a CFP that's helping you make sure your investment philosophy fits within all 6 areas of your financial life, because that's where people get in trouble right now, is when market is providing lots of upside and there could be some risks brewing. If you get too aggressive and your investment philosophy starts, or your investment approach starts becoming out of sync with the rest of your financial life, that's when people get in trouble. That's when people get in trouble. So work with your CFP on that. If you don't have a CFP that can help you, you can always contact one on my team. Find us online, Korhorn.com. That's Korhorn with K, wisemoneyshow.com. You can find us there as well, or give us a call, 574-247-5898. All right, there you have it. Go out and take your next wise step in your financial life.